Good morning. Hello. Since pandemic highs, GoPro has fallen by over 90%. This year alone, it's already fallen more than 25% as of the time I'm recording this video. And for many people who remember how exciting GoPro was as a name and as a brand when it first came out, this fall is epic and perhaps a bit confusing. In the income statement, the statement of operations, I'm going to simplify and analyze the most important parts because here at Sage Seeds Capital, our Sage Seeds AI has flagged this as an extreme undervaluation situation. Right off the bat, you can see that revenue is stable, gross profit is slightly decreasing, but looking nothing like an imminent collapse as the stock price would suggest. But skipping all the complexity, going to the bottom, GoPro is oscillating between barely profitable and barely unprofitable. This struggle, this back and forth is what has so many investors, especially institutional investors, fed up with the stock as far as I can tell. So let's compare to the cash flow statement. In the net cash provided by operating activities, the day-to-day business at GoPro sometimes makes money, sometimes loses a little bit of money, a very similar situation. However, and this is what the Sage Seeds AI is surely picking up on, if I scroll just a little bit lower, look at the cash flow related to investing activities, it should catch my eye that all of these numbers are an order of magnitude, an extra digit larger than the cash used and flowing through the actual operating business. This makes me want to take us to the balance sheet where I'm going to do something that I almost can't believe is possible in the 2020s. Cash and cash equivalents plus marketable securities gets us to about 245 million. Scrolling down to long-term debt, I'm going to subtract this 92 million. I'm going to round up to 100 million, leaving me with about 145 million in cash and marketable securities if I completely pay off the long-term debt. Back here, the recent 2025 prices have given GoPro a market cap of less than this 145 million. GoPro is trading under a market cap of 130 million. That does mean that GoPro might be a classical Gramian net-net.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
An absolutely insane undervaluation, something that in business schools we continuously teach is impossible to see in modern markets, especially for a company like GoPro. Yet here it is, GoPro so hated that it's almost a $250 million in straight up cash is not seeming worth it to most investors. Well, if you find yourself on this channel, please hit the like button. Consider subscribing to help the channel out because here we are not like most investors. What matters in a net-net situation and what the rest of this video is going to be is looking at what specifically is being counted as cash and cash equivalents, then hoping management has a clear strategy for how it's going to use that cash in the immediate future. And maybe if we have time/interest, checking in on how GoPro's actual business is doing lately. It did collect more than $1 billion in revenue last year, so it's probably worth checking out. But again, let's dive in so that your wisdom can blossom. Peeking under the hood to get more detail about what is counted as a cash equivalent, we're using the very common Note 2 to the financial statements. Cash equivalents right here are broken up into money market funds. That's it. This little asterisk note 1 prompts us to look down and see that they haven't included it in a row, but any difference between the money market funds up here and what we saw on the balance sheet being almost 220 or 230 million is a cool $69.9 million that is in a checking account. So that's quite a checking account indeed. Rounding everything out is a 24 million just about split between US Treasuries, commercial paper, corporate debt, and other government securities, meaning non-US government securities. Not too complicated, simple, to the point. Very good news in my mind, if we're going to use this as a net-net play, is that there's no complicated derivative instruments in this, thank God. And just in general, All of this is pretty straightforward, so it should not be too difficult for it to maintain its value if, for example, management were to change, owners were to change, anything like that would happen. Good news indeed. On the flip side, getting an extra level of detail into the current liabilities, again, this is what would be taken out of our cash and our checking account if we were to immediately extract the value from GoPro. The sorts of things that make up the bulk of the current liabilities are accrued sales incentives. These are rebates to customers, as well as in general, just things related to employee liabilities, customer returns, customer prepayments, returning that. Everything seems to be, or the bulk of everything seems to be related to either GoPro employees or GoPro customers, which is probably the best case scenario for a net-net play. Customers and employees are the least likely to try to change the value of these liabilities if a situation were to occur where everything needs to be squared away right away. So now I'm taking us to the item 7. This is the management's discussion and analysis, where the CEO office of GoPro has prepared a letter to potential investors discussing the latest trends. And hopefully, if it's a good letter, a good item 7, they'll even explain what they're thinking about strategically and offer hints about what they might do in the future. And GoPro actually spending more time than usual discussing future strategy. I guess it makes sense. They see the stock price falling and falling and falling and falling for years now. At this point, they're probably trying to directly address the lack of faith that the markets have in the company. But so let's see what they've prepared for us. Step 1, stratagem 1, whatever you want to call it, driving profitability through improved efficiency, overall called better execution. Some highlights that I'm going to pick out from this paragraph without reading the whole paragraph is management reminding investors that they already have an efficient global organization, emphasis on the global. Second, GoPro works predominantly through partnerships with distributors and retailers. Very different than if GoPro were trying to set up its own stores or anything like that. Second point, GoPro is investing in research and development to enhance customer experience. Third point, improve profitability. The specifics of this are identifying the problem. The problem is smartphone and tablet camera quality continuously has improved over the last decade. This improvement has been so noticeable that the entire digital camera market has been experiencing just negative trends. The two negative trends are less cameras being sold, but also combined with lower profit margins on all cameras. GoPro says that they expect that the markets for their business will remain this competitive, that these two trends will not change. However, neither trend is as bad in international markets as it is in GoPro's domestic market, which is the United States. International markets are allowing for higher profit margins as a baseline. In addition, most GoPro products now upsell customers into subscription service offerings. There is special editing tools that you can only get through GoPro.com itself. At this point, since all of the tools and the cloud storage costs, most of those costs have been front loaded to get the service up and running, the profit margins are very high for anyone that is subscribing to GoPro.com. And so this is what management is thinking about. But what are the numbers that they're seeing? Here is a table explaining the numbers that they're looking at to make decisions. They're tracking the number of camera units shipped to customers, which has increased by 6% in the latest year. They're also tracking the average selling price per camera, which has decreased by double digits, a negative 13%, decreasing from $389 to, in the latest full year, only $337. Now, that's still quite a lot for a camera, which is unfortunate because even though the average selling price is decreasing in a very negative way, it's tough to argue that this is some sort of floor for cameras. Keep in mind that there are entire workable cell phones that include decent cameras for most day-to-day use, selling for less than just the GoPro. Unfortunately, the subscription business we just referenced, their only hope at rapidly increasing profitability, well, in the latest year, it experienced a negative 27% change in revenue. A terrible performance. In order to have that sort of performance, not only did you not convince a lot of people to sign up, but many people, by definition, had to have left GoPro.com in the last year. That means users that were already subscribed chose to leave, which is a worst case type of scenario. And so even though GoPro has the R&D edge, GoPro clearly has value in its cameras, in my opinion. The reality is that management's only plan is to stick to cameras. Sticking to cameras does not seem like a good move when these are the numbers presented to you, which is why, despite having almost $250 million in cash, just straight up cash, GoPro might seriously consider shutting down very, very soon. Shortly after showing us these data points, management explains that since the beginning of GoPro's life, they have continuously entered into multi-year agreements. These agreements are usually with sponsors, event organizers, different resorts, and athletes, all part of marketing efforts to get the GoPro brand out there and associated with really cool marketing efforts. However, this table clearly shows one thing. Of all the contractual agreements, let's break it up into the lease agreements, so this is the office building, and then everything else, which includes all of the cool marketing efforts. Here they are highlighting that the marketing efforts beyond 12 months, beyond the immediate right now, aren't just not growing, they're being wound down very aggressively. And then the leases, as you can see, there's more lease obligations beyond 12 months than in the next 12 months. But there is a little bullet point here, point 1. This bullet point explains that all contractual facility subleases end in 2026. This table presented this way, these details go just short of the management saying, we're going to shut down GoPro. But they absolutely imply that, in my opinion. The management of GoPro explaining to us, look, we had a strategy that we believed in, but it has clearly not played out. The data has come in and the data is not looking good. Therefore, we're not just cutting costs. Immediately, we're not marketing anymore. We're not going to renew our leases. GoPro is, in my opinion, fully in wind down, get prepared for bankruptcy mode. And while bankruptcy sounds scary, bankruptcy is the absolute best thing we could want as value investors when the shares of this company are available for less than its current assets minus its current liabilities. Please make sure to subscribe, and I hope we can get this video to something like 50 likes, because truthfully, nets like this do not happen anymore. This is an insane situation. I'm very glad I'm able to notice it and bring it to you all before it plays out. The more people we can get engaged on this channel, the easier it'll be for me to take time out of my day to continue to present these extreme situations as the Sage Seeds AI highlights them to me.